everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about not just the state of New Jersey, but some other states that may be considering a similar bill. All right. So essentially, long story short, New Jersey is essentially looking to pass a bill in which landlords, property managers, and so on, people essentially that essentially control who gets into an apartment, rented places, townhomes, condos, things of that sort, to consider alternative ways out, alternative sources outside of their credit score. Okay, now this is a huge game changer simply because it's been like this for years. But not only has New Jersey been trying to pass this for the past 10 years, but there's so much that goes on outside of a general, credit report and credit score. Obviously, we're used to it, right? That's how banks determine if you're going to get the auto loan, the mortgage, the personal loan, the credit card. So we're used to that. The thing about it is they're finding that it makes it more difficult for people to find a place to live, or they're forced to live with family, friends, or they end up being homeless. So especially when you're in those states where you're going to be affected, by, hurricanes or, anything could damage certain things, because let's be honest, if you have a place to live, your credit score good or bad, then you're fine. The issue is that if something happens to that place, let's say insurance wise, but the exact same things happens, if you have a car, you drive a car every day, you get into an accident, it gets totaled, you got the money for the insurance. The issue is that, you got the money for the insurance, or if there's a difference between what you owe and what the insurance is willing to pay out. But now you're you're pretty much put in a situation, if you drove a $10,000 car and you still owed a certain amount of money and they paid off the car, all that's great. But the problem is that your credit has to be in place in order for that to happen. Okay, and that puts people in a very tough position, especially if the car goes out. And now with the housing market, they're trying to change that. They're trying to force landlords and property managers to look at things outside of your credit score. All right. So for example, they're going to be looking at your employment history. Obviously, they got to make sure that there's enough income to suffice what the rent is going to be. And they also are looking at your health history as well too, making sure you're not just trying to get into a place and so of course with COVID and things of that sort. So, but they're really trying to push this. If they do successfully push this, they will be one of the first states to actually start this new wave of, hey, now we can't just look at your credit score and report, and now you're going to look at some other factors. Now that doesn't mean that you're going to be chosen, and that doesn't mean that they cannot still look at your credit score and credit report. It's just that they must look at other factors. But I'm gonna be honest, in most cases that usually ends up being the situation anyway. Credit score a lot of times doesn't necessarily always decline the application. Sometimes it is income, sometimes and sometimes it is other factors. Sometimes there's an eviction, so there's a lot of things that are in place. But when you're forcing someone now to say, hey, listen, we're now going to consider other factors, now you're just going to be hoping that people report people that don't follow those guidelines. All right. So what are your thoughts? Throw them in the comments. Let's see what you guys think about it. Have you experienced anything like that? All right. So of course, if you like this video, like it. You want to share it. And as always, be sure to subscribe, as we have nothing but great content on the way. Thank you all so much. Have a great day.